Investors and traders, welcome to the channel Market Chart Pattern. Today is 18th of June 2023. I hope everyone is having a great weekend. In this video segment, we will be taking a look at the key US stock indices as we always do for this segment. This video is for educational purposes only and it is not a financial advice. Before we begin to get into the technical side of things and begin to discuss the chart patterns that we will be looking at, I just wanted to bring something to your attention. So this is a chart which I have seen on the internet. I'm not sure exactly what is the original source of this chart, but it is not my own chart. And what they are saying is basically here they are looking at the ETF QQQ from 2009 to 2023, which is now 20% above the 150-day average. And what they have got is an intermediate peak in this column. So these are the dates and a percentage QQQ above 150-day moving average. And what they're indicating is that whenever that has happened, there has been a drawdown, and they have given the magnitude of the drawdown in this column and the duration in terms of the dates and the number of sessions right here. So they have started this from the bull market start of 2009, and then quite recently they have come back and have a statistic till the 22nd of November 2021. And what they are looking at is that perhaps because of this statistical condition, 12th of June might actually start some sort of a decline in prices as well. So here, one of the things that I just wanted to mention was that for quite a long period of in time, the Federal Reserve Bank in the United States, they were actually doing quantitative easing, and that continued for quite some time. But the reality based on the statistics is that nonetheless we still had pullback in the prices. One of the interesting ones is to actually take a look at the August 30, 2018. I believe during this period, the Federal Reserve actually started to talk of actually starting a quantitative tightening, which perhaps they did, and perhaps they may even have raised rates, but don't quote me on that one. But that led to a minus 23.5% decline in prices. And then there are some really short ones like this one. This is because of the COVID, only lasted a few weeks. And then when the massive amount of liquidity was injected in the system by Federal Reserve, we still had this condition come in between 2nd of September to the 21st of September 2020. And what we have got is a few times also this happening in 2021. In fact, 16th of February and 22nd of November 2021. And now they are looking at whether this is going to happen or not. Another statistics that I wanted to point out was this one. So basically this is a chart. What it says is that S&P 500 streaks of extreme overbought readings since 1945 to 2023. So they go back a lot in time, and what they're saying is quite a rally over the last couple of weeks. The S&P 500 has closed at extreme overbought levels, plus 2 standard deviations above 50-day moving average for 10 straight days now, longest streak since April 2021. So they have got another methodology where they are looking at the 50-day moving average, and then they're looking at some statistical figure coming from the 2 standard deviations, and they're looking at and saying that okay, when the price has been above the 50-day moving average and above 2 standard deviations, that has resulted in an overbought condition. So having said that, now let's just go back and look at our charts. And what we see in our chart is this is the daily chart of Nasdaq 100 E-mini futures. We have a pattern which I personally believe is a completed pattern in terms of the price we were looking at. And that price comes at 15,400 roughly, and that is the 78.6% Fibonacci retracement. Initially, we had a pattern which I thought might be actually a strong resistance level, because it was an ABCD, a one-to-one price projection, and also coming right at the 61.8% Fibonacci retracement, giving us a confluence level. But the momentum was so strong, the price actually overtook that, and at that point, we pointed out it looks like the price might actually be heading towards the 78.6% Fibonacci retracement, which is 15,400 roughly speaking. And the reason was that on the ES we had a higher target that yet had to be achieved. So it was a matter whether the ES would join the NQs, or NQs join ES in terms of a further target, and the NQs happen to join in terms of the further target and moved up to the 78.6% Fibonacci retracement. And also, if you look at these ABCDs which I've got here, I'll just quickly run through them. So the black one, what you see is basically an AB price projection from point C times 2.618. So it in fact gives us a target of around 15,506 596, excuse me. So roughly of excuse me, sorry, got that wrong. So this gives us a target of 15,666, because this is the 2.618 times the AB swing projected from point C. And then we have another one, which is this orange line. This orange one, if we take this segment from here to here, we project it from this point and multiply this by 1.618, we get a price level which is in alignment with the 78.6% Fibonacci retracement, and giving us a confluence level. And then finally, we also have this inside of the CD leg of this ABCD formation, we have a nested smaller ABCD highlighted in red. So this red is, if you take this AB and you project it from C and multiply the AB leg with 1.618, you get a level of around 15,300, which is fairly close to all these levels that we are discussing in terms of confluence level, with the exception of 15,666, which is a little bit of a higher level for this black ABCD. And then we also have finally an expansion of this entire swing, like this expansion comes around here. So I'm just going to remove this quickly. So we have a number of pattern formations which are coming in a close proximity, giving us a level of confluence to take a look at, to be aware of, to be alert of. And also in terms of the price levels that we were watching for, we have a completed pattern in my opinion, because the price reached 78.6% Fibonacci retracement, and in fact last Friday the price pulled back a little bit. So this is something which we'll be watching, and if there is a possibility that next week when we return from the long weekend, we might actually be starting some sort of a correction or a pullback of some meaningful magnitude, actually starting sometime next week. So this is what we think might happen. Whether in fact it's going to happen or not, we do not know, but we'll be watching the price action and these pattern formations really carefully. But we do have an ABCD or a completed price completed pattern in my opinion right here right now, and our objective of the 78.6% Fibonacci retracement price being met already. So let's move to the ES. So ES is also right at the, on a daily chart, right at the 78.6% Fibonacci retracement. Initially we were looking for a sideways to higher market going to 4430. In fact this is exactly what it did, and in fact it exceeded that and came to the 78.6% retracement. So it's also a completed pattern. There's a possibility that in fact the price could move a little bit higher here, just like in the NQ we saw 15,666. 4,500 to 4,530 also remains a possibility on the weekly chart, but on the daily chart, the targets that we were looking at, we have a completed ABCD pattern formation. So guys, this is what we are looking at in terms of these two key indices. Let's also take a look at the Small cap, so this is a Russell. So Russell, after doing this ABCD, had a nice correction. The price action has improved as it closed above 1852. Looks like it's finding resistance in this zone of 78.6% Fibonacci retracement, 61.8% retracement. There is a possibility that in fact it could actually pull back right back into this range where it broke out from. So this is the blue shaded area if there is a correction which might take place. Let's take a look at YM. Excuse me. Let me do this. So here what we are looking at is basically um, because this 61.8% retracement was held, the red lines draw an ABCD formation which could take the price up high, challenging these old highs coming in from 13th of December 2022. So what the index has done so far is basically it's a trading range, and now it's going and challenging the upper boundary of the range, and there's a possibility it might actually go and do that, as we also have some higher levels of possible higher levels in ES and also the NQ, and it'll be interesting to see whether what how the price will behave when it reaches and tries to take out the old highs coming in from 13th of December 2022. Otherwise, as you can see, it has been a long trading range, and also the Dow is only 30 stocks, and it's also price weighted. So some stock with higher prices, if it begins to move in either direction, has a high influence on this index. So guys, this is what we are looking at in terms of the prices in these stocks indices that we follow. The message is that the key indices that we are following, the NQ, the Nasdaq 100, and the ES, we have, in my opinion, completed patterns where we have reached the 78.6% Fibonacci retracements, and we have a number of these ABCDs coming really close to each other. In fact, if I were to take this on an hourly chart here, something what I can also point out is that you know we have had several of these inside. There are like several smaller ABCDs inside this as well, which I have not drawn because we focus mainly on the daily price action, because of the higher level time intervals that we are following. So this is what we are looking at, guys. If you like our analysis, how we look at these markets from a technical perspective using pattern recognition, Fibonacci retracements, price projections, extensions, please do subscribe to the channel. And if you found this video of educational value, then please do smash that like button. It just gives me an indication that people find my videos of educational value, and it encourages me to keep on producing more of these for people from an educational perspective. So thank you very much for watching the video. Good luck and good trading, and have a great weekend.